Okay, 40 points on the Nifty. 10,841 is where we find ourselves at. Pankaj Murarka is joining us now. He's founder Renaissance Investment Managers. Pankaj, it's always a pleasure. Great to have you with us here on the show. First up, Pankaj, is the optimism that we are seeing from, brokers, market analysts, everyone on corporate banks well-founded? We've got an upgrade from Citi on Axis Bank today. I'm sure you've seen that report. We've got something from Morgan Stanley on ICICI Bank. Where are you at as far as corporate banks go?
Yeah, I think so, Prashant, and we've discussed this earlier. Some of these larger corporate banks, they've been coming out of a cycle where they had significant asset quality issues on the balance sheet, and the provisions have been elevated now for almost 10 quarters. We're nearing the end of elevated provisions on their P&L. So once that's done and behind, their earnings will see a significant uplift in their earnings going into the next year. The core franchise in terms of what they do with their retail banks still remains intact and has been pretty robust and has been growing very well. Also, some of the banks that you mentioned have or are undergoing management change. So that's also something which investors are looking forward to in terms of understanding the strategy of the new management and their growth plans. So that's also making investors a bit excited about these banks. So I think these banks are coming out of a very low earnings base, and probably next year onwards there should be a sharp recovery in their earnings.
Okay. Pankaj, we were just speaking to our previous guest who was talking about how the mid caps are at a significant discount compared to the large caps. 6-year discount at this point. Do you think that maybe now is the time to probably accumulate a couple of mid caps? And if so, which ones? If you can talk stocks, then stocks. If not, then sectors.
So, yeah, what has happened is, if you see at the start of last year, the Nifty mid-cap index was almost at something like 50% premium to the Nifty index or the large-cap index. Obviously, over the last year, calendar year 18, we've seen significant moderation or correction in mid-cap stocks versus the index. And as a result of which, that discount is moderated significantly. And I think last time I checked, that was something like about 10% or so premium, which is pretty reasonable. So obviously mid-caps are much less expensive than what they were a year back. Having said that, Ekta, India, you always have, irrespective of the economic cycles, there are a lot of good mid-cap companies which deliver or which tend to deliver very high or strong growth, So there's always an opportunity to buy into some of these good quality businesses which can be growing at 20-25% over the next 3-5 years, irrespective of the market cycle. So I think on a stock-specific basis, obviously there are interesting, stocks or ideas which one can nibble into or buy into from a medium-term perspective. One space which we like from a slightly more medium-term to longer-term perspective is the internet space in India. We think with the penetration of smartphones which has happened over the last 2 years post the Jio launch, we think internet users are growing very significantly, and that business is now coming to some critical mass in size, and we find some good exciting companies in the internet space in India which really excite us.
You want to name names, Pankaj?
There are a handful of companies. I must give a disclosure that
sure, absolutely, with full disclosure.
Yeah, so we remain interested in them, So we like InfoEdge as a company. I think it's a great company with some leadership in some 3 or 4 key verticals, and their business is growing pretty robustly. And likewise, there are many more companies in the internet space. I think they are just at the, we feel very excited about their future growth prospects as the whole. We believe that whole internet businesses are reaching some very important inflection point in India.
Okay. Besides that, any other stocks that you would like, say, for example, from the mid-cap pharmaceutical space?
Yeah, so we've always liked CRAMS as a story because I think, our view is that the CRAMS sector in India is a secular growth story for the next 10-15 years, and some of these good companies within the sector can keep growing at high teens for the next 10 or 20 years. The fundamental drivers of the sector are pretty strong, and I think the sector, to my mind, is exactly at the position where IT used to be at one point of time in the late 90s. So again, that's one sector which we believe, because of the significant cost differentials between developed markets versus emerging markets and India, has reached a pretty important inflection point, and some of the Indian companies have gained critical mass in the sector. So we're pretty excited about CRAMS as a story.
Okay. All right, Pankaj. Any disclosures that you'd like to leave us with?
Yeah, so it's safe to presume that we have ownership interest in all of the stocks that we discussed about.
All right. Thanks very much for joining in and talking to us. So that is the view coming in from Renaissance Investment with regards to the fundamentals of the market. Quiet day, you would have to say. So the Bank Nifty is picking up a little bit of pace, up around 0.4%, but probably not quiet in terms of news, because we are expecting that outcome from the Yes Bank board meet. Plus, we do have IndusInd Bank, which will be coming out with its numbers. So maybe the second half of the session is probably going to see much more in terms of news traction.